All right, as the title says, here's what you need to know about closing costs, specifically for buyers. I'll give you the quick and dirty, and then I'll kind of get into some details if you want to watch through to towards the end of the video. So typically closing costs are comprised of a handful of things: taxes, title services, escrow account establishment, attorney's fees, lender's fees, things like that, okay? What you could expect is typically those to be about 2% of your loan amount, not necessarily your sales price, but your loan amount. So if you're putting a lot of money down and you have a smaller loan, you're gonna have lower closing costs than if you're putting no money down and your sales price is the equivalent of your loan amount. It's based on loan amount, however. So title, let's just go through each one of these. Taxes. The government is going to get their money. You know, it's two things we're certain of: death and taxes. Well, certainly in real estate that holds true. So the government's going to charge you their taxes. Title services. So title services encompass a couple of different things, from like the cost that the title company charges to get all the paperwork together to do all of the paperwork, as well as a title insurance policy. A title insurance policy protects your claim legally to that property. I recommend that you get title insurance. I have it on all of my homes, but it is optional for you to have a title policy. If you have a loan, it is not optional for you to have lender's title policy. They are going to ensure that their interest in your property is protected and you're going to pay for it. But that's the title services. It's the docket prep, as well as the title insurance. The third one is escrows. So when you start your mortgage, you're going to be paying one payment for your principal, interest, taxes, and insurance. Real estate taxes and homeowners insurance are things that are paid on a regular basis. You make your one mortgage payment for principal, interest, taxes, and insurance, and the taxes and insurance goes into what's known as an escrow account, where they hold that money for 6 months or a year, depending on how frequently the real estate taxes and insurance has to be paid, for 6 months or a year, in order to pay that on your behalf. But therefore, you don't have the bill of paying your separate real estate taxes and insurance. This is also required by most lenders because they want to make sure that you do not fall back in tax payments and jeopardize their position on the property with liens and judgments and things like that. But at the time of closing, they need to establish this account that has a certain amount of money in it day one, so that when they need to pay taxes in 6 months or homeowners insurance in a year, that there's enough money in that escrow account available to make those payments. So that's the third thing. The fourth thing is lender fees. You know, different mortgage companies are going to have different fees associated with it. And then lastly is attorney's fees. That's actually kind of baked into the title insurance, to be honest. What can you do to minimize these? Taxes, I don't know, good luck. You know what I'm saying? There's not a lot you can do to not pay the government. Title services, you can talk to the title company and see if there's different discounts that you could do. There's an ability, if the homeowner of the property that you're buying still has their title insurance policy, you may be able to get a copy of it and therefore only be charged a reissue rate on your policy. So you could save a little bit of money there, and it doesn't hurt to ask the title company if there's any other way that, you know, there could be some discounts or whatever else provided. And then the escrows, nope, nothing you can really do with that. Your lender is going to require that they take some money at closing to make sure that that's all paid for. Lender's fees, yes, you can always ask your loan officer if there's anything they can do to minimize some fees or give you a credit or whatever it might be. Some will be happy to, some won't. That's totally fine. You know, oftentimes you get what you pay for. So having slightly higher lender fees may mean that you got a better deal on your loan. But and that's pretty much it. Typically, it's about 2% of your loan balance, your initial loan balance. Those are the 5 areas. Really, it's kind of 4 because attorney's fees probably be moved into that title services category. But and yeah, you might be able to save some money. Best of luck. Look forward to talking to you guys. Let me know if you have any other real estate related questions.